Dave Yeski here. Just wanted to check in for just a minute to talk about some of the crazy market volatility we've seen in the last few days and year to date. As you've probably noticed, yesterday the Dow was up almost 1,000 points, and today it was down over 1,000 points. But that volatility has been somewhat typical, although the last 2 days have been particularly pointed example of that volatility. You know, the Federal Reserve raised interest rates by half a point yesterday, and many people have suggested that that's why the market went up, because it wasn't more than half a point, and that was widely anticipated. Why the market went down today, who knows? Nobody ever knows. Turn on the TV, open a newspaper, you'll get a lot of opinions about what drove the market, but nobody really knows. Day to day, the market is just digesting whatever information is out there. And this kind of volatility, I mean, I'll just share what some of you may already be aware of, and that is that, year to date, the markets have been choppier than usual. The Dow Jones Industrial Average on the left and the MSCI All Country World Index on the right, they look very similar because in the short run, markets tend to move together. In the long run, markets and market segments will tend to diverge and perform differently. But in the short run, everything is reacting, every market is reacting to the same news. And you can see how choppy it is. And the markets, depending on which ones you're looking at, they're down, 10 to 15% year to date. Our portfolios are down, the stock portion of our portfolios are down about 9% the last time I looked. And, nobody ever likes to see that, but it's been a very busy year, between the various factors that the markets have had to deal with, which include, because markets worry. That's what markets do. That's what investors do. They worry about the news, and every day there's news. And if it's not bad, it's not news, right? And so investors have been grappling with concerns about inflation, which is currently over 8% year over year. They've been worrying about the war in Ukraine, which has been adding to that inflation, in addition to potentially adding to other commodity rises. Ukraine is not a big producer of oil. Of course, Russia is, but it is a big producer of grains, one of the biggest producers of wheat in the world. So that has an effect on commodity markets and inflation. And they've been worried about rising interest rates. The old days of being able to get a long-term mortgage at 3.5% are, at least for now, behind us, with 30-year fixed mortgages being above 5%. Now, it's interesting how everyone is freaked out, or I shouldn't say that. Some people are freaked out about a mortgage rate over 5%, but Elisa likes to tell the story of back in the 80s, talking to someone who was really happy that they had managed to get a mortgage. And in fact, it was an assumable mortgage. They managed to assume a mortgage at 13%. But that was a big deal because, a new mortgage was 16 or 17%. So it's all relative. I think it's sometimes good to take a somewhat different angle. I don't know how many of you have seen Ron Howard's amazing film Apollo 13, but you may recall Ed Harris, who played Gene Kranz, who was in charge of mission control. At one point after the disaster started, gathering all the engineers together and asking for a status. And every engineer around the table was talking about systems failing. This system failed, that system failed, double redundancy of systems had failed. And at some point he said, stop it, people, wait. Let's start from the standpoint of capability. What's good on the spacecraft? And I think that's really a valuable perspective, no matter what you're looking at, including markets and the economy. So what's good? Inflation may have peaked. As those of you who attended our recent webinar heard from Yusuf, exclusive of energy costs, all the other components of inflation had actually flattened out or begun to fall before the war in Ukraine. And so almost all of that recent spike in inflation was made in Moscow, honestly. And so absent that and absent energy, the spike in energy costs, everything else seems to have stabilized or started to fall. So once energy costs stabilize, I think we could see, an overall fall in the inflation rate. The economy is still growing. It's been dinged by events of the last 3 to 5 months, but it continues to grow at a slower rate. The Conference Board is now predicting that the economy will probably grow will probably attain 3% growth this year, which in recent decades, 3% has actually been considered a really healthy growth rate for the U.S. economy and even much of the developed world. So the economy is still growing. Consumers are still spending. They're sitting on $2 trillion of excess savings that they accumulated during the pandemic when they received many rounds of government support. And honestly, they weren't spending as much money. And finally, companies and individuals are just resilient. This is the thing. You have to look for what's good. And what's good is human resilience. And companies are resilient, but of course, companies are resilient because they're made up of human beings. And so that's the fundamental source of our overall resilience. I mean, let's look at the Dow and the All Country World Index over 5 years instead of just 5 months. And what you can see is that, with a few chops along the way, you can see back in late 2018, there was a dip because there were concerns about the Fed raising interest rates and another kind of war. They were concerned about the trade war with China. And then, of course, we had the huge fall at the beginning of 2020 with the COVID pandemic. But through all of that and through all the little ups and downs that you can see along there, the market fundamentally rises because it's reflective of what's going on in the economy. And the economy is just human beings. At the end of the day, what happens in the world is going to be based on human beings, for better or for worse. The good news for all of us is that human beings in general are good and resilient and will overcome problems. And so what we want to do is we don't want to think about the last 5 days. We don't want to think about the last 5 months. Let's think about the last 5 years and the next 5 years, and the fact that the resilient human beings around us and around the world will carry us through this. There will be recovery. Look for what's good, because what's good deep down is actually what drives the economy in the long run, and it's what drives the markets in the long run. So that's all I have to say today, and thank you for joining me.